Today's video is a follow-up on my video about how you can sell your home and pay zero capital gains tax. And the thing I want to emphasize here is that when you go to sell your home, if you know you own or occupied it in 2 out of the previous 5 years, you want to let your title company know that so they prepare the certification at the closing. And each title company will have their own form, but this is an example the IRS puts on their site, and it goes through about 6 questions you got to answer here and certify that it was a primary residence. And I'm just going to read the top couple to show you what it's like. And you're going to put in your name, the address of the property, and your taxpayer ID number, which is their social security number. And then it's going to have true-false questions, and it's going to say, I owned and used the residence as my principal residence for periods aggregating 2 years or more during the 5-year period ending on the date of the sale or exchange of the residence. So that's the key thing there, is that 2 out of 5 years it had to be your primary residence in order to qualify for this capital gains tax exclusion. Then the second one is, I have not sold or exchanged another principal residence during the 2-year period ending on the date of the sale or exchange of the residence. So if you remember my other video, I said if you aren't currently living in the home but it was your principal residence for 2 out of the last 5 years, you can use this capital gains exclusion only once every 2 years. So if you moved to some other home and then sold that and recently used it, then you can't go back and use this one until 2 years goes by. But for most folks, if you just do it once every 2 years, you're going to be fine. And then it goes down from there for additional questions about whether you're single or married. But again, just a reminder from my other video, if you're single, you can exclude up to $250,000 in capital gains. And if you're married, it doubles up to $500,000. And if you're married, they're going to ask questions of you and your spouse to make sure you both live there as your primary residence for that 2 out of the previous 5 years. So watch my other video on how all the mechanics of the exemption works. But in general, in that video I talk about how a lot of people are going to fall into that 15% capital gains tax rate, because for a single person, if you make between $39,000 and $434,000 and change, your long-term capital gains tax rate is 15%. And for a married couple, you can make between around $78,000 to $488,000, and you're going to fall into that 15% capital gains tax bracket. So if you take the max gain for a single person of $250,000 at 15%, that's up to $37,500 in capital gains you can exclude tax-free on the sale of your primary residence. And for a married couple, that's doubled to $75,000. So as I've stated previously, that's one of the best tax breaks out there I know of. And if you're looking at selling your primary residence, go through that test and make sure you're hitting that 2 out of 5 year rule so that you can take advantage of this great tax break on the sale of your primary residence. So thanks for watching, and we'll see you next time.